IG is launching the US FANG index, comprising of 10 tech stocks in the United States, including Facebook, Amazon, Netflix, and Google's parent company Alphabet, along with Twitter, Tesla, Apple, Nvidia, Baidu, and Alibaba. Joining me to discuss the outlook for the sector from California is Wang, best-selling author and CEO at Constellation Research, a Silicon Valley-based tech advisory and research firm. Ray, good to speak to you again. Now, we've just come through first quarter earnings season. Apple, of course, was one of the outperformers, while Alphabet disappointed. So what are some of your kind of takeaways that we've learned about the tech sector from the results season?
You know, it's a great point. When we look at the indexes, when we look at these FANG stocks and the stocks that you mentioned, these are companies that have hundreds of millions of active users. And I think that's the most important piece here, right? You've got a lot of users. You're basically not necessarily getting more users, but the goal is to actually increase average revenue per user, or ARPU. And these are companies that have the capabilities to do that. Now, Apple, it was better than expectations. iPhone sales are definitely down. iPad sales are up. There's some good news there, but it's the services component that's important. We're seeing services go from 14% to 20% to eventually, at some point in 2024, this could be almost 35% of the company. And so this is the type of growth. You have the devices. What are you doing with it? You're now focusing on building up that user base. Now, Google's challenge is a little bit different. Google is up against Amazon and all different fronts, not just on cloud computing, but Amazon is starting to take ad revenue away from Google, right? And what we have here is what we call data-driven digital networks. These are companies with these large numbers of hundreds of millions of users that are using data to sell things, whether it's advertising, promotion, next best action. But the point being is, once you build one of these data-driven digital networks, it's very hard to have a competitor come up from behind. And so the only competitor Facebook and Google has to worry about in the North American market is, of course, Amazon. However, we can flip it around. If you're looking at other markets, they'll have to worry about Alibaba. They'll have to worry about Baidu as well. So there are about 50 markets like this, which will eventually become what we call digital duopolies.
So you mentioned all the data there and the vast number of users. So I guess that's why regulation continues to be one of the key risks to the sector, don't you think?
So regulation, especially privacy regulation, is going to be one of those big risk factors. And the challenge really is, and I'm going to say this very lightly, but intentionally, I don't think a lot of the policymakers understand the implications of these digital duopolies. They know that tech is gaining ground in everybody's life. There's important information. They're trying to come around the edges on privacy, but I think it's going to take the legislators and policymakers at least 10 more years before they understand what has happened.
All right, that's quite a long time, so we've got time.
We've got time.
Yeah. So when it comes to the tech sector, obviously it's had a very strong start to the year, but we have seen a little bit of a pullback in the recent sessions. So I guess the question from an investment perspective is whether there's more room to run as we go into the second quarter and the third quarter, or whether there's a risk that we could be past that peak.
So part of the big macro factors right now is because of the trade relationships between the US and China. And I think, you know, when that lifts, we will see a different type of environment where people are going to move into other sectors. Right now, there's not a lot of sectors to move into that have been consistent. That little scare that occurred in February, January timeframe where people were pulling out of tech, think it was overvalued, I think they were wrong. Right? The sector's got a long way to go, especially when there's few competitors that are going to play in this market. And like I mentioned, in the next 10 years, there are going to be 50 distinct markets where there are 100 players, right? And each one of these FANG stocks right now is one of those players that could be in anything. They can be in healthcare, they can be in advertising, they can be in finance. They're all going to hit every one of those markets. And that's why I'm saying the regulators don't understand the implications, and most businesses are going to see this as a huge opportunity. We're going to come back and look back at this period in time that this is just the beginning.
But given the fact that we're sort of at the late cycle phase, and tech tends to be a cyclical sector, do you think that there's still likely to be opportunities now, or is it kind of best to wait for more of a big decline in the markets before getting in?
I think that this is a midterm, definitely a midterm play, a longer term play as well. It's very hard for anyone to get to that level of active users. And so these are one of those which you just hold for 3-4 years and you notice that the doubling effect continues.
So within our US FANG index, I mentioned some of the names at the beginning, but are there certain stocks that you particularly like, or kind of subsectors within the tech sector that really attracts your attention?
That's a great question, right? We always look at Facebook as a huge risk because of the privacy issue. And it's not because they don't have the active users. The number we care about the most is really their average revenue per user growth. And we see that continuing to go and grow over time. It's just that the privacy risks, the fact that they're a target for privacy issues, that's going to be one of their biggest challenges. So in fact, even we think that by Q4, their numbers are probably going to flip somewhere around by 170, 175. Even though they're up at this moment, we think that there's another privacy scandal that's coming. But you take something like Apple, we think that there's a lot of long-term growth. We think that they can easily get to 220, 230 by Q4, partly because of the services growth and the stabilization of iPhone declines with other hardware from iPads to the watches. Now, when we think about something like Netflix, definitely a lot more growth there. But that's really coming from programming and content and the international side for them, which is outside of the US, although the growth that's occurring in Europe and Asia and other areas, including even India. Right. And then when we look at Google, which was the question is, they've got the big challenge. Where are they going to go? Well, we still think that they'll get to a 1,300, 1,350 target, mostly because there's not a lot of players and they're ramping up their cloud business. And that cloud business is competing head on with Amazon, but there's a distrust with Amazon Web Services that's out there where companies don't want to share their data with Amazon for fear that Amazon will steal or copy their model and come after them. And so we're starting to see that shift happen. We can see it in the deal flow that's occurring with large Fortune 500 companies. And then there's other things that are out there, like Twitter's an interesting one. We're seeing definitely growth on the advertising side. They did really well the last few quarters. We'll also see them get smarter about their advertising and how they target their advertising going forward. So lots of very exciting areas in that in that fund as well, in that index.
So it sounds as though you've got a lot of optimism. You're not too worried about the regulatory side, but there must be some areas where you are a bit more cautionary. I mean, what do you think are some of the key headwinds that could face this sector? What are some of the stocks that we should be a little bit more cautious towards?
Well, the headwinds that I'm more worried about are related to business-to-business spending, right? The B2B engine is actually powering a lot of the growth in Amazon, Microsoft, and Google. While the consumer side looks great, and that's more cyclical, it's really the consistency of the B2B revenues. So where companies are selling to other companies, right? And in this case, for Amazon and Google and Microsoft, it's really their cloud compute. That's the number that's going to carry them into the growth territory. And because there's only 3 or 4 players in each one of these markets for cloud computing, that's going to be one area to look at. I'm also worried a little bit about what happens in terms of where we go in terms of growth for post-trade deal. There's a lot of money being priced in, priced out. We see the fluctuations of what the U.S.-China trade relationships look like. So we'll have to see what happens if the trade deals are completed before Q4 in 2019. I think we have a better shot. If they're after Q4, then China has the leverage on the U.S. because we enter our election season.
All right, and very finally, you touched upon Netflix a bit earlier, but I wanted to get your take on the landscape in streaming right now. Do you think that Netflix can really maintain that dominance? Because we know there's a lot of players entering into the market, not least Walt Disney as one of the latest.
So we looked at the Disney offering. I don't think it's going to compete head-on with Netflix, but I think we have to look at this category a little bit differently. In this digital world, what we're worried about is capturing the time and attention of users. If you don't capture their time, make things easier, or get them excited, they go away. I think Netflix is competing more with Fortnite than they're competing with Disney. And I think that's going to be a very important thing, is how people plan and use their leisure time. That's going to determine how well Netflix does. And so you might see Netflix get into other areas besides just the movie and the content area to make sure that they capture everyone's attention.
Ray, thank you so much for your time.
Hey, thanks a lot for having me. Good luck.
That was Ray Wang, best-selling author and CEO at Constellation Research. And if you'd like to learn more about IG's US FANG index, head to our news and analysis page at IG.com, and you can place a trade on the index by typing US FANG into the search box within the trading platform. I'm Victoria Scholar, and we'll see you very soon.